Hey guys, what's going on? Your old buddy Tim back in the Revolved Realty studio. Enjoying another hot beverage now. You know, I'm busted. I was drinking what was it the other day? I ran by the Starbucks and honest to God, I never spend money on coffee. I swear, you can ask my wife. I make it at home. I put it in the travel mug. But every now and then, you just got to have a little something. And so the other day, I ran by the Starbucks and got myself a venti skinny caramel macchiato. Oh my God. Good stuff. Okay. Forget the skinny part. I just throw that in there. But today I'm trying this is a venti. Forget the skinny. This is a salted caramel macchiato. And I got to tell you, not too bad. Is it worth $6? Probably not, but you know, sometimes a man just has to feed his habit. So, hey, today on the program, we're talking about first-time home buyers. And the reason I'm talking about this is I am on a lot of newsletter lists. I get a lot of articles and that sort of thing from folks. And this is one that came from the Real Estate Association. It was an interview with real estate mogul Barbara Corcoran. Now, do you know Barbara Corcoran? She's the hot older lady on Shark Tank, Barbara Corcoran, who made her fortune in real estate. By the way, if you haven't read her biography, you need to read it, whether you're a man or a woman. Just great stuff. A really good story about a lady that knew what she wanted and created a plan and went and got it and has done amazing things. Anyway, I digress, as I so often do. The article that came out was called The 4 Biggest Mistakes First-Time Homebuyers Make. And the reason I'm sharing this with you is I have seen first-time homebuyers make these mistakes, and they can be costly mistakes, and they are things that we try to guide them through, you know, with the understanding that the first time you buy a home, hell, the second or third time you buy a home, it can be a confusing experience. You might not know everything that goes on. I've honestly talked to young folks primarily who have no clue how the process works. So I think these are good tips. I read over them. I agreed with them. So I thought I'd do a quick video for you. Again, the 4 biggest mistakes first-time home buyers make, according to Barbara Corcoran. Let's see. Number 1, not a clowning. Hang on a second. Number 1, not accounting for closing costs. I see this one a lot. According to Barbara, the biggest mistake that first-time homebuyers make is they forget that they need closing costs, not just the down payment. Closing costs, which may include agent commissions, transfer sales taxes, all of the other costs associated with closing the deal, can add up to, according to Barbara, 2 to 5% of the total cost of the home. A good average, I think, is about 6%. So if you've got a $200,000 home, aside from all the commissions and everything you're going to pay, you might be looking at, 10, 12 grand in closing costs. Now, closing costs are always a point of negotiation. Buyers typically always ask the seller to pay the closing costs. Sellers typically don't want to, but they usually settle somewhere in the middle. But that's one thing you've got to keep in mind, folks, especially you first-time home buyers. It's not just the 10 or 20% that you have to put down. You are going to have those costs associated with the closing. It's a mistake that Barbara made herself. She says, when I bought my first home, I showed up at the table to close without the closing costs. Thank God I was able to borrow it from the very nice seller, or I couldn't have closed. Basically, she had the seller finance or pay for her closing costs. So keep that in mind. That's number 1. Don't forget the closing costs. Number 2, not checking your credit score. Oh my God, the world revolves around your credit score. And if you don't know what your credit score is, you need to go check. You can go to freecreditscore.com, Credit Karma, any number of those kind of websites, and they will show you your credit score for free. If you don't know what a credit score is, basically the big credit bureaus, TransUnion, Equifax, and there's another one. Basically, they look at your credit, the amount of money that you owe, how current you are on payments, that sort of thing. How if you've had any dings where you didn't pay your bills, and they total up a credit score above 700. I think is considered a high credit score. Anything 600 or below is a low credit score, although now there are lenders who will loan in the 500s. But according to Barbara, the second mistake they make is they don't check their credit score. The loan you get to buy the property will be totally dependent on your credit rating. According to Barbara, generally speaking, the higher your credit score, the lower your interest rate on the mortgage, meaning the better your credit, the better the bank or the mortgage company feels about you paying that money back, so you are not as great a risk, and so they will give you a lesser credit score. Now, just because you have a low credit score doesn't mean you can't get financing. You may just have to do things to bring that credit score up. Okay. And there are things you can do. You can work with credit repair companies. A lot of the mortgage brokers also offer credit repair, which is a very smart thing to do because they know they have to help their customers repair the credit in order to apply for the loan. So check into that. Go check your credit score. Find out what it is. And if you are looking at buying a house, you need to work to get that credit score up. And if you need help with that, give me a call. Let me take a sip of my lovely hot beverage. Not so hot anymore. All right, number 3. The number 3 mistake first-time home buyers make, according to Barbara Corcoran, and I agree with this one 100%, falling in love with a house instead of the block or the neighborhood. The emotional mistake that so many first-time homebuyers make is they fall in love with the apartment or the house instead of the block or the neighborhood, meaning that you may fall in love with this house located in a neighborhood that is not as so desirable. You have to keep in mind in real estate, the value of your house is affected greatly by outside factors, your neighborhood, your neighbors, the crime rate, the school district, that sort of thing. So rather than falling in love with a property or a house, you need to be in love with the whole neighborhood. Okay, you need to look at everything that's going on there. Context is what's actually going to decide most of the value of your property. It's going to be 85% determined by the neighborhood or the town you're living in. So keep that in mind. Just because you find a house that you fall in love with, it may not be the best house for you to invest in. And finally, and this goes back to financing, the fourth mistake that first-time homebuyers make, according to Barbara, is they do not get pre-qualified for a mortgage. She's right. I got to give that one to Barbara. We see a lot of folks that are interested in starting their home shopping, but they have not been pre-qualified. They have not even talked to a mortgage company, so they do not know if they can even qualify for a loan. Now, at my office, we will not show you property until you have a pre-approval or a pre-qualification letter from your bank or your lender. The reason is there is absolutely no reason for us to show you property if you can't get financed, right? It's the same reason why we won't show you property above a certain budget level. If you are pre-qualified for $200,000, it does no one any good to show you a house that's $300,000. But again, you've got to get that pre-qualification letter. The good news is it's very easy to do. You simply call me and I will put you in touch with a mortgage broker, and you get on the phone, and in 5 minutes you have that pre-qualification. Basically, they look at the money that you make, the money that you have, and they say, based on that bit of information, we're going to pre-qualify you. Now, my buddy Stephen and Alan have done, and I have done videos on this in the past about being pre-qualified. That doesn't mean you're going to get the loan. That simply means you are past the first step: pre-qualification, pre-approval, and underwriting. And my mouth is not working. So those are the 4 mistakes. You do not account for closing costs. You do not check your credit score. You fall in love with your house instead of the hood, and you don't get pre-qualified for a mortgage. All right. So the good news is if you are a first-time home buyer, I'm your guy. I can work with you and get you through all of that. I can hook you up with our preferred lenders. We can get you pre-qualified. We can determine your budget, exactly what you're looking for, and we will get in the car and we will go look at houses, and they will be houses that you can afford, okay? Hey, that's it. If you've got any questions on anything that you see in these videos, drop them in below. And if you'd like to talk to me in person, hey, 256-679-0704. If I can do anything for you when it comes to real estate. We'll even get a nice $6 beverage. The good news is, as of today, you do not have to submit a pre-qualification letter to Starbucks to buy a $6 cup of coffee. I have a feeling the time will come. I might want to start working on my credit score. All right. Hey, guys, I'll see you later.